No, not really. I think we have to put the GDP numbers that we saw yesterday into perspective. Part of it is obviously it was a bit of a tough winter, and those may have had an impact on the GDP numbers. And consumer confidence, yeah, it's down, but still at a very healthy rate. So as we look at the industry, still relatively healthy. And yeah, our call is between 17 and 17.5 million units. So, as we step back and we look at the conditions, again, consumer confidence still relatively high. People feel good about their jobs. Interest rates relatively low. So we think that's a good call for the year.
The problem with all of these predictions and these analysts, particularly some of the positive estimates, are that it is so far out in the future. I mean, Tesla missed their 4 quarters report. Yes, we're coming up on the May 6th earnings report. Now, right now, the target price is, for the fundamental consensus target price, it's $267, which is about 13-14% above where it's trading now. When you consider that you're looking at about 20% volatility around earnings, you're not getting paid for that upside when you look at volatility. On top of that, it's trading at about 400 times forward earnings estimates. The estimates have come down from $2.81 for 2015 just 4 months ago down to 48 cents. That's an 83% reduction for just this 12 months. And they've also reduced it for 2016. Yes, they have some new models coming on, but it's really far out in the future.
Okay. I think the first quarter set us up for a very similar trend of what we saw last year in terms of weakness at the start of the year. But given the weakness that we've continued to see in March and in April data, I don't think we're going to see the same type of rebound that we saw last year. I expect to see about a 1% pace across the first 6 months of the year, followed by about a 2% pace in the latter 6 months of the year. So averaging that out on an annual pace, I do expect to see 2015 GDP well below that trend rate of 2.3%.